Taiwanese index is up 30 points.
It has the responsibility to restore price stability, and we just have to do it. That's the task we've been given under the law.
Adani Transmission as well as Adani Green, there's been an additional pledge creation. In Adani Transmission, there's 0.76% further creation of pledge, and this is again towards SBI Cap Trustee.
RASM in its recent meet has clarified that this 10,000 crore includes paint capex for plant, working capital, branding as well as tinting machine costs.
ROA accretive given the fact that the merged entity could have a 20-30 basis point gain on the ROA.
The Nifty flitting between red and green. What's looking good is the mid-cap index, which is up almost about 75 points right now.
Own expectation from the BNP Paribas economists have gone up to about 5.75% as far as the terminal Fed rate is concerned.
We have been buying about 0.3 to 0.4 million meters per year from the market.
We are going to be incurring a capital expenditure of close to 4,500 crores over the next 4 years.
The Nifty is up 0.5%, but the mid-cap index is up 1.7%.
Hundreds of airplanes from Boeing, which we think and believe will lead to many more, which will create many jobs here in India and many jobs back at home in the United States.
So down around 100 odd points.
Good afternoon. Welcome to Closing Bell, live from the CNBC TV 18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi Upadhyay. And in the newsroom, we've got Mangalam Malu joining in today. Hi, Surbhi. Hi, Mangalam. Not quite the day we've gotten used to, right? Like every day there's been green on the screen. We start off the show by saying, look, what a great market this is. It's been resilient. But today, things have, taken a turn for the worse. We had a pretty okay start, flattish start. But thereafter, every 1 hour, every 2 hours, we've had some selling pressure. And the latest bout of selling pressure has taken the Nifty to that 17,600 mark, almost there. Though in the last 30 minutes, things have stabilized. So we are trying to defend 17,600. But it's a firmly lower session today. 3/4 of a percentage point gone in the benchmark indices. The Nifty down 132 points. The Sensex lower by 450 points. Mid-caps under pressure, down 1/3 of a percentage point, but relatively outperforming. And that's been the trend over the last couple of days. The advanced decline ratio has moved in favor of the losing side now. 1,500 stocks currently in the red. Well, there's only one sector which is in the green today, and that's the Nifty Metal Index. All the other sectors are under pressure, and the Nifty Metal Index is also holding up in the green by the skin of its teeth, just up close to about 0.1%. So the gainers list includes a few commodity names like Tata Steel and Hindalco. L&T has been doing well over the last 2 days. Today, up 1.25%, adding on to the strength yesterday. Bharti Airtel higher by 1%. In the banking pack, it's largely red, but Axis Bank is holding up pretty firm. On the losing side, heavyweights, Reliance Industries, ITC, TCS are dragging their feet. Adani Group names have come in for some amount of profit booking. Pretty weak right now.
So, Reema, actually, I was smiling to myself when you said every day we come in and talk about a resilient market. It's actually all of 3 days, to be honest, because we've been in such a long slump. But yes, we had 3 good days. Now, what has happened today? Today's down move, the red candle, is almost as big as yesterday's red candle, but it hasn't entirely taken over yesterday's up move, which is why I'm watching out for yesterday's low very closely. Pull up the Nifty intraday. The low today is closer to 17,612. Yesterday's low was 17,602. So for me, one of the most critical watch points will be whether we will break yesterday's low to begin with. The lowest point of this downdraft obviously was 17,255. That's still a far cry from where we are. But the fact is that there's been momentum on the downside. Like there was momentum on the upside yesterday, today is a complete reversal in terms of sentiment. You've, of course, illustrated a lot of the factors and the moving stocks and the pieces of the puzzle here. I just want to go and take a global round check as well, because what's happening here is slightly worse than what we've seen in our neighborhood or what's happening in the European markets right now. Singapore, Hong Kong, these markets were down about 0.5%. Similar kind of moves playing out on the FTSE in the UK. Your CAC and DAX are down about 0.25%. So India is basically outperforming on the downside. And we are back to watching what we happily were choosing to ignore yesterday, which is that 10-year US yield and the dollar index. The yield touched 4%. Right now, just a shade below that number. The dollar index is very steady. It's not showing any decline, very comfortably above the 105.5 handle. So let's see how these two things move. That's the point. Mangalam, at least, I mean, Nigel and I were discussing this yesterday. I was like, listen, I'm holding my breath till this non-farm payrolls data is out, and then we can perhaps say whether we're comfortably past all the Fed fears or not. But I think the market's getting back in touch with that reality. Can't wish it away as easily as perhaps how we thought we could yesterday.
Well, that's the nature of the market, ain't it? It is interesting that the way we're selling off right now, it was an exact opposite of what happened yesterday. Yesterday, for most part, we consolidated. And the last hour, there was that massive swing on the upside. Today, it's the other side. It'll be interesting to see whether those who took, just the way those who took bullish positions in the last hour yesterday are actually having to unwind those positions right now. Will the reverse happen tomorrow as well or not? That's the kind of market that we're in right now. Virtually closer to yesterday's low as well, like Surabhi, you pointed out, 17,602. So let's see whether that breaks or not. But what's interesting is that we saw a lot of put writing yesterday. So a lot of people were hoping that, we find support at lower levels. And now those guys have been caught on the wrong side. So they're unwinding their positions. In the next half an hour or so, we will also have the weekly options expiry play out. And now call writers are extremely active. The 17,600 call, 17,650 call, as well as the 17,700 calls. All of them extremely active and seeing a fair amount of sell-off. In fact, 1.9 crore shares added to the 17,650 level for a premium of 4-5 rupees, telling you that if the market does hold above that 17,650 mark for a bit, there could be a case for further short covering. But until that happens, there is weakness. 17,700 call as well. The premium all but eroded out there. 1.4 crore shares added in open interest. That one, that place too. The other thing that really stands out is that all through today's trading session, for most part of the day, the advances line was above the declines line. But now as we speak, just in the last half an hour or so, those lines have intersected and the red line has come out on top. So we have more stocks declining, 1,600 stocks in the red on the NSE as against 1250 in the green on the National Stock Exchange itself. So there you have it, the advanced decline lines up for you on the screen. So choppiness expected in the last hour of trade. How should you position yourself? We do have with us Kush Bora joining in with some closing strategies. Kush, good afternoon. This is a day so far belonging to the bears, closer to 17,600, which is yesterday's low. Do you think there is a twist in the tail for the last half an hour, or maybe it could further go lower?
Hi, Mangalam. First off, thank you for having me on the show. Well, we'd want the markets to go up and, we'd want it to be a fairy tale story for the bulls. Sadly, the charts aren't saying that. I mean, if I look at, the mid-December or in fact, the beginning of December when the markets made a new high, emotions aside, purely technically, if you look at the markets, we've made a very clear lower highs pattern, ever since. Even this rally, if you see, it's largely been a short covering rally where we rebounded from a 200-day, moving average. But that was without the participation of a lot of big names. Of course, Reliance, SBI participated, but then there wasn't that follow through that we were looking for. Hence the sluggishness in Bank Nifty also, hence the sluggishness in Nifty also. So my concern is that this will remain a sell on rise market until certain key levels are taken out on the Nifty and on the Bank Nifty. Those levels being 17,800 on the Nifty and 41,800 on the Bank Nifty. So until those levels are taken out, this for me will perhaps be, at best a range bound market. And, if I'm being very honest, it'll probably be a sell on rise kind of a market till these levels are taken out.
Okay, sell on rise kind of a market, 17,610 now, inching very close to a 150-point knock now. Hemang Jani, retail equity strategist at Motilal Oswal Financial Services, now joins in. Hemang, before we get talking about other stocks, first on Reliance Industries, what's spooking the stock?
Good afternoon, Rima. I think we had seen some pullback in Reliance a few days back, but the sense one is getting is that in the core business, once this windfall tax, is imposed and the refining and petrochem side of the business is not looking that good given the rising trend for the overall product basket that they have. And in terms of the retail business, I think we are seeing a bit of a slowdown, and maybe that is what is driving some kind of a sell-off in some of the names like Reliance, and to some extent, some of the other index heavyweights like Mahindra Mahindra and ITC also.
Oh yes, absolutely. I mean, Kush's point is very well taken. That he's arguing that in the rally up, a lot of the big names did not participate, but today in the momentum down, a lot of these names are quite evident. Look at ITC under pressure, ICICI Bank, big names, TCS, A lot of big names participating on the downside, exerting lower pressure. Hemang, hi, good afternoon. We're talking a lot about the weakness. Let's talk about the strength as well. We're seeing some bottom fishing going on in metal stocks. It's quite evident in Tata Steel. It's the best performing name on the Nifty today. Would you be with the market on this? Because overall, there's a lot of expectation, a lot of commentary on, an expectation of steel prices going up in the Indian market. So would you look at riding that wave?
So, Surbhi, what we have seen is that after a steep correction in the ferrous and non-ferrous metals, some people are turning a little positive given that the Chinese data is showing signs of recovery, and the spreads in Asia are still, about 10% below the long-term average. And the sense one is getting is that, globally, particularly China is looking a little better. So a correction provides a good opportunity for some of the names like Hindalco. We are not so bullish on Tata Steel and the ferrous metals, but I think Hindalco definitely, is something that we have a very positive view on, particularly after this correction. So it can provide maybe 10-15% kind of a short-term uptick given this backdrop.
Right. Hemang, just hang in there because there are a bunch of stocks which are also buzzing. So, I mean, all is not lost on the market right now. We have, something like an Olectra Green Tech locked in upper circuit, a big move coming by in RVNL in the last few minutes as well. And Maharashtra Seamless, that's the other one, which is surging with a gain of almost 13-14 odd percent. Most of the gains coming by in just the last half an hour or so. So, while a lot of stocks are buzzing, the other one which is buzzing with some news behind it, it's Sequent Scientific. They've called off their merger with Trineta. Ekta joins in with some details on why the street is cheering this and what it means for the growth prospects of the company going ahead. Ekta.
Thanks for that. Well, yes, this particular acquisition that they were making of Tenetia Pharma has now been called off for Sequent Scientific, and it is being read as a positive simply because, they were shelling, it was an enterprise value of over 200 odd crores, though it was an India-focused veterinary company. It came probably at a time where Sequent Scientific was facing a lot of problems fundamentally. This particular acquisition was announced in November of 2022, and the company in their conference call had indicated that the closure of the acquisition is in fact dragging. Now, remember that the stock itself, Sequent Scientific, is down over 50% from its 52-week high. Separately, if you just look at their Q3 numbers, they were loss-making for the third consecutive quarter. Their margins were sub 3% for the third consecutive quarter. They had single-digit.
Invest once and enjoy guaranteed maturity with life cover.
Welcome back here with us on Closing Bell. So while the index is telling you that it's a downbeat market, we're picking out lots of stocks and examples of all the action that's happening beneath the surface. And Olectra Green Tech is definitely one such name. Look at the stock right now. It's it's 20%. That's the kind of move. It's up 35% just in the last couple of sessions, just in the month of March. And it's had a phenomenal year as well, 35-36% so far in 2023. Sonia is joining in with the details on this one. Sonia, it all started, I remember, with that order with Reliance where they were getting into those green buses. What's happening with this company and this stock?
So, just to put it into perspective, right, the stock, although it's had a big 40% rally this year, the stock has had a terrible 2022. So in that sense, it's, just sort of recovering from the lows that it saw last year. In that context, let me tell you a little bit about the company. As we know, the company is into manufacturing of electric buses as well as insulators. And the rally began when the company signed an agreement to develop a hydrogen bus with Reliance Industries. Now, the hydrogen bus will be launched within a year. But there are a slew of orders that have come through for Olectra Green Tech since then. In fact, in March itself, on the 6th of March, the company received orders from the Telangana government for 550 electric buses. The value of those 550 buses is about 1,000 crores, but they will be executed over a period of 16 months. Also, the company received an approval from the government for its electric tippers, which is, the heavy trucks which are used. The first order for 20 e-tippers is in the final stages of discussion as well. Now, the electric bus division has been very strong for Electra Greentech. So if you look at the 9 months performance itself, the revenues in the e-bus division went up by almost 174% year on year. I had a chance to chat with the management a while back, and they said that they are also getting into electric trucks in a big way. They, are L1 in one of the large orders for electric three-wheelers as well. They're doing some fundraising too. They're doing a QIP of around 800 crores that's planned within the next 1 to 2 months. Out of that, 400 crores is a preferential issue that will happen to the promoters. They're raising funds for a new plant in Hyderabad, which will particularly manufacture e-trucks and buses. They've already acquired the land for that. So a lot of positive triggers for Electra Greentech, but largely it is, it all started when they signed that JV with Reliance to manufacture a hydrogen bus. Back to you.
All right, got that. Thanks very much, Sonia, for all of the details there on Electra. Definitely quite a shining spark in the market today. Hemang, I'm not sure if you tracked the company, if you've seen this kind of a stunning move. Any thoughts here? Or maybe if not Electra Greentech, how else would you look at the green or let's say the EV play? Any specific interesting companies that have come on your radar?
So Surbhi, this particular name we do not cover, but I think from a auto components perspective, I think Bosch is something that we've been liking, and there is a lot of strength in the stock price of Bosch also. And given the positioning of Bosch in terms of providing certain components to the EV, I think there is some interest which is there, and we think that this could be an interesting space, though it's not a very liquid stock, but this is something that definitely interests us. Apart from, of course, Bharat Forge and Motherson, which are our preferred picks within the auto component space.
All right, Hemang, we'll leave it at that today. Thank you so much for joining in. As we speak, the market actually briefly broke yesterday's low on the Nifty and has found some support there, coming back above that 17,600 mark as we speak. But the texture continues to remain weak. We have Reliance, which has moved to the low point of trade. And what's not helping is the weakness in the IT space. In fact, yesterday, the Nasdaq actually outperformed, gained about 0.4% as against the Dow, which was lower. But today, no support coming in from the IT pack. TCS at the low point of trade. Infosys not doing too well. ICICI Bank and the Nifty Bank not doing too well as well. So from all sides, there has been some sort of weakness. And even the mid-cap index extends its cuts. When we started the show, it was down about a third of a percent. And right now, closing in on that 0.5% cut. We have with us Dinshaw Irani, who's the Chief Investment Officer at Helios Capital, joining us now. Dinshaw, thank you for joining in. It's been a tough few days in the market. I mean, despite the sort of up move that we've seen at the index level, individual stocks, they've been all over the place. How do you navigate yourself through a market like this?
So thank you for having me on your show. But, we've been calling this out for a while now, that we always felt that the market will trade in a band. In fact, at the beginning of the year, we thought that the market will be, first half will be a total flattish kind of a market. But now with the data points coming out of the US, I believe this flattishness may just extend for the year as such. And maybe it'll be a very narrow band in the market trades. But I don't think there's enough for us to panic. But the fact is that the globe is not going to, the global markets rather are not going to be stable for a while. And that is what is probably playing on our investment sentiments. I mean, look at the data points coming out of the US, right? The unemployment data, the low figures that came out of unemployment were last seen in 1969 in the US. After that, you saw a runaway inflation kind of a period for the US. And secondly, I mean, the fact that the Fed is now talking about a higher rate, which is obvious, because if you see these kind of numbers, you have to pull up the rates and shock the market. So that's why you're talking about now 6.25 when people were talking about on 5.25 as the peak rate of interest rates from the US Fed. But I think that all will play upon everybody. And I think we are better placed because our internal consumption and the fact that the manufacturing is kicking in also to that extent for outsourcing, I think that will prop up our markets to an extent. And maybe we won't see as much correction, but it'll be a flattish kind of a market for the year.
In that context, the Friday, February jobs data, the non-farm payroll data is going to be very crucial. The next FOMC meeting, remember, is on the 21st and 22nd of March. And from now to the next FOMC meeting on Friday, we'll get the February jobs data. And remember, this comes on the back of a very strong January jobs data. And the last FOMC meet had not reacted to the January jobs data. The January jobs data had come after the last FOMC meet. So this FOMC meet is going to take into account two jobs data, January and February. And then on 14th of March, we've got the US CPI inflation number. And if both these turn out to be red hot, it will greenlight the Fed into perhaps accelerating on the rate hike cycle. So that's going to be the big anxiety, worry point and a talking point for the markets until we get that decision ultimately. Dinshaw, morning, and thanks so much for joining in. So if now we need to position ourselves for 12 months or 9 months at least of very flat, lackluster moves, from a portfolio point of view, what are the big changes? Because earlier you were positioning for a pickup in the second half. Now that's not going to happen. So what are the changes that you would recommend? Should we up the cash that we hold in our books?
Actually, it's afternoon. You said no morning. So let me just correct you. But anyway, so basically what we've decided was that we actually were looking at external facing sectors. We thought that probably things will pan out to an extent and probably get a good opportunity to pick up some exporters like IT services and stuff like that. But that doesn't seem to be the case. I think it's better to stay away from them. And actually, you're seeing that of late now. I think some semblance is coming in valuations in the IT space at least, but still it's fairly far away from what our comfort levels are. So we'll still wait it out. However, what we did rather add to was basically the domestic facing plays as such. Consumption was one such theme. We're looking at manufacturing as another theme that we're adding to in some way or the other. And obviously our favorites is the financial sector. And that also now, instead of NBFCs, we've got very limited exposure to those now because our belief is that with interest rates moving up, and they have to move up in India, though we don't have an inflation issue, but our interest rates have to keep pace with the US just to manage the currency as such. And as a result, you will see some kind of pressure on the asset side for these NBFCs. So that's why we're staying away from those. In fact, in our long short portfolio, we're short a few names there as such. Probably the only NBFC that we have an exposure to is mainly the one which deals with CV financing and so on. Yeah. So that's one. And obviously the banking sector is where we are focused on. And that again, the private sector banks. The argument that went against the private sector banks was that the NIMs have probably peaked out. And from here on, one may see a compression in NIMs. Maybe so in the short run, but in the longer run, I think the offtake will be far greater for the lending book, and obviously that will compensate for the mild compression that one may see in the NIMs.
Dinshaw, hi, good afternoon, Surabhi here. So I'm going to ask you about something interesting. Let me confirm this first. I believe you've added some of these high-profile new age stocks recently to your portfolio. I don't know if the names are right, but I got to know somewhere that perhaps you've been looking at Paytm and even a Zomato. Do tell us if that's the case, and if so, what's the rationale? Because despite the talk and a lot of promise of profitability, early break-even targets, the fact is, in terms of the share price, that needle isn't really moving much from the lows.
So okay, Surabhi, I won't confirm or deny the names. The fact is that the fintech company that we picked up, platform company rather, that company has done fairly well. Okay, today you should just show this graph. It's not doing too well today, but from the time we picked up, it's done fairly well. And frankly, I mean, we did add to it a bit. In fact, after the quarterly numbers, our comfort levels, in fact, moved up quite sharply in that name also. So that's why we added to our existing portion as such. And frankly, the call here is even in the food tech space, both these platform offerers, what do you look for in a platform offering? I mean, basically that there is convenience, that convenience can be encashed, and is it appealing to the masses? And is it replicable easily? Well, the answer to the last question is a definite no. You've seen that in the case of food tech companies. In fact, globally also, if you look at the various other markets, developed markets, there are only two players, and the number one player is a far away leader as compared to the number two player. In India, fortunately, there are only two players were equally divided roughly. In the case of fintech, I remember a time a couple of years ago when every third company or every two of three companies were fintech companies which were coming out with IPOs. But fortunately, that has tapered off. Quite a few have melted away. In fact, some have folded up. So you can see this one single big guy really gaining going forward as such. And the market has never been an issue. The potential to mine this market has never been an issue. So obviously, these two are the ones which will gain over a longer period of time, and that's why we remain with them.
Well, Dinshaw, you know, from new age companies, let's also talk about some old economy stocks which you liked. And this one is from the Adani Group. I mean, I remember, you know, you're being extremely bullish on both their ports business as well as their cement assets, and also entered at the lower levels. Have you made enough profit, or do you continue to hold on to them for a bit now?
No. We will continue. We were not looking for any opportunistic play here. We will continue to hold on. The fact is that look at the data of the ports. I mean, 40% share of container traffic, 25% share of port traffic. It's a huge company, and frankly, I mean, you can very well justify it on cash flows, on PEs, on EV/EBITDAs, or whatever you want to play it out with. So that's one. And Ambuja, frankly, has been a pure play cement company, and just came into the group fold 6-7 months back as such. Otherwise, it was a fairly standalone good company. But the group has brought in a lot of new, if you will, I mean, cost-saving measures in terms of, say, energy costs or in terms of transport costs. I think that will add to the earnings growth for this particular stock also going forward. So that's why we continue to hold on to these names.
Okay, so that's some of the Adani Group entities. Just, a follow-up to that. I guess government capex is the one constant theme in this market, right? That's why the money has been consistently coming in from the government, and then also in terms of market participants. Are you looking at playing that at all, Dinshaw? If so, how?
So basically, Surabhi, we have been looking at names, and unfortunately, we don't like those names who are directly doing work for state governments or for central governments, because as you know, that there's lots of payment issues, there are lots of dealings which don't appeal to us because we look at ESG as a guide for us. But frankly, I mean, we're looking at certain private players who are not directly dealing with government expenditures and stuff like that. So we're still trying to find a footing there. So I won't even try to disclose any names out here.
Right. You know, just to follow up, Dinshaw, on your Adani investments, I mean, you have publicly spoken about Adani Ports as well as Ambuja, but after the decline that we've seen, does any other Adani Group stock also fly into your radar?
Not really, because, I mean, actually valuations are... So basically our initial call also was very clear that viability is not a problem, it was a valuation issue, right? And still after these huge corrections, our analysts still can't justify the valuations as such in some other names. So we're staying away from those. And frankly, I mean, these are long drawn projects which are going to reap benefits after 4 or 5 years. So might as well wait for 4 or 5 years and then look at those names again at that point in time rather than try to get into them now.
Dinshaw, great conversation. We'll have to leave it there. Thank you very much for joining in. Need to slip into a short break. On the other side, we'll tell you what dealing rooms are saying in our segment D Street Chatter. We'll get you a few technical BTST ideas from our experts too.
Welcome back. You're watching us on Closing Bell. We're coming to you live from the Motilal Oswal newsroom. And as we speak, the market's trudging around at the lows of today's trading session, led lower by all the frontliners. We have Reliance at the low point, ICICI Bank not doing too well, TCS also at the low point, and M&M, which has been a rank outperformer, currently seeing some profits at the low point for that stock too. Nimesh joins in as always with all that he's getting from the dealing room. Nimesh, looks like the problem of the market is similar to that of the Indian cricket team. The top order is just not firing.
Well, that could be the day for the could be only for today. You know?
Yeah.
But we've seen a bit of a momentum on the upside for the last many days now. And maybe today is a day when some of the large caps are not participating. In fact, they're dragging the Nifty down. So while the Nifty is down 150 points, it doesn't look like a very bad market or everything is getting sold into. It's largely some large, as you rightly pointed out, some large cap names like Reliance, ICICI Bank, they are dragging the markets down. Even in terms of flows, I guess it's not very strong negative flows is what I understand. It's going to be mixed again from the FIs. The financials even then are now well bid is what the flows are indicating. There is a bit of weekly expiry pressure which is adding to the financials as well. But broadly, there is buy flow in the financial names. I guess from a technical point of view, 17,800 is acting as a very strong resistance. For the last many days, we are hovering around those levels and retrieving back from there. So I guess that's a level to break now on the upside for a meaningful move from here on. So that's something to track. The mid cap for the first day this week is relatively underperforming now. You're seeing some signs of cracks of a bit of profit booking, so to speak, in the broader markets as well. So that's a bit of a worry. But I guess while the Nifty looks ugly with down 150 points, not everything is falling like 9 pins, and there is some buying support from the larger FIs, especially in the financial names.
All right, so there is some buying by larger FIs in the financial names. The data today will confirm that in 9 out of 10 times, Nimish, it has been exactly as you pointed out in the dealing room check itself. But individual stocks, what do you have on your list?
Okay, so something that you track, Mangalam, very closely. The first stock on my list is Devyani International. That stock has been consolidating a very narrow range for the last many weeks now. And now I believe there's going to be a large block deal in Devyani very soon. And the indication is that maybe the private equity investor is a likely seller in that block. So that's something to track going forward. So that's the first one. The second stock is Manappuram Finance. After a long time, some bit of buying traction is back in this particular stock. I believe some long-only funds have done active buyers in that stock, and hence that's the reason why in the weak market that stock is gaining and is up to 1% in today's trade. Similarly is the case with IDFC First Bank as well. After a long time, some bit of buying traction is back in IDFC First Bank as well. And there the feedback is that maybe one of the long-only fund has an active buyer in IDFC First Bank. So that's something to track. So the volumes are going to be quite high in today's trade in IDFC First Bank. And the last stock is M&M, largely under pressure today because of sell-flows at FIDs. So it's not too much of selling, but lack of buying from the institutions is what pulling M&M down in today's trade.
Okay, got that, Nimesh. Thank you very much for the update there from dealing rooms and, of course, what the key talking points are in terms of the stock action. Market's feeling a lot of pressure, and we are the bulls are really trying to hold on to the 17,600 level. They're finding it tough, just slipping below that as we speak. And there is momentum on the downside because a lot of the big stocks, the heavyweights, your ICICI Bank, Reliance, TCS, these are the big names that are facing this down heat today. Kush Bora is back with us. Kush, so you tell us, what do you make of this momentum on the downside in the last half hour? What's the advice now for tomorrow?
Well, Surbi, very interestingly, if I look at the data for the next weekly expiry, there is still a very significant call base at 17,700, 17,800. And the quantum is practically the double of what we are seeing at 17,500 put options. So this clearly tells me that the resistance zones are there and they're just getting reaffirmed. So as I said, I wouldn't be looking at, too many buying opportunities, at least on the index. But as you rightly said, there are a lot of pockets, outside of the indices where there's a lot of traction. So indices for me would either be sell on rise or an avoid for now.
Okay, thank you very much for that. Let's also get in Ambrish Baliga, independent market expert, to weigh in on the markets and help with some ideas. Ambrish, one of the stock recommendations is Interglobe Aviation. We know travel demand is booming. It's soaring through the skies now. But what else?
Hi, Rima. In fact, last many years, I did not have a buy on aviation at all. But now this sector seems interesting from a medium-term investment. I mean, if you look at the fares, compared to 2019, domestic fares are about 66% higher. International fares are about 23% higher. And more importantly, they are sustaining. Like earlier, we used to see sudden spikes, but then they used to cool off. Now, that's not happening. And at the same time, crude is also softening. Indigo reported highest ever quarterly revenue of about 14,900 last quarter, which was about 20% growth Q-on-Q. Load factor is extremely good, 85%. Net free cash in hand is about 7,000 crores. Total fleet of 302 versus 279 last quarter. And from FY24, we should see deliveries of about of those 500 aircraft starting from FY24. Could possibly take about 6-7 years. Domestic market share is about 56%, and this is a clear leader and will remain one despite Air India, Air Asia, Vistara merger, because that would make possibly the Air India group a number 2, but closer to about 25%, which is still much lower than 56% which they have. International operations are improving. Nearly 23% of the capacity is for international operations. Cargo business is a focus area now. Second Airbus freighter has been added. More on the way over the next possibly 12 months. My expected EPS for FY25 is about 140, and because of which I have a target of about 2,380.
All right, 2,380 is the target on Interglobe Aviation, the stock around that 1,850 odd mark. Amrish, hold on to that. I'd like to, get your views on Religare as well. A 5,000 crore market cap company, 5,150 odd crores, but it has value in its insurance business, and it's now time for value unlocking. That's not me saying it, that's the management of Religare saying it. In fact, today we had a conversation with them after their subsidiary Religare Finvest prepaid some 2,200 crore rupees worth loans to lenders. They are also looking for an IPO for their brokerage business soon. So let's hear out what the management says and get in Ambrish's views on them.
Now is the time for value unlocking. And for value unlocking, there are multiple ways of doing it, actually creating a robust plan for all the businesses, ensuring that all these companies reach their logical conclusion and they keep growing. But what you asked is that whether we are thinking of a demerger or whether we are thinking of an IPO. First, let me tell you one thing. Whatever we do, we have to first understand how well we fit into the regulatory framework. Nothing is happening unless and until IRDA and the RBI, we fit into that particular, so, we have to do a backward integration. Whichever is best fitted as far as the regulatory framework is concerned, that is exactly what we will be doing it. Standalone health insurance company is much better. So we have certain benchmarks for a company, which is, of course, Star. Then we have our own strengths, which are even over and above, which I would consider are much better than the most of the companies. We are regulatory compliant and we are completely solvent as far as, the ratios are concerned. So my thought is that this is going to be valued much, much better than the pair companies, and it has its own strength.
That's Religare, 15 minutes past 3. The 3 p.m. move looks like it has been on the downside. The Nifty is now down 170 points. Now significantly lower than the 17,600 mark, led lower across by all the heavyweights that we've been talking about. And the Nifty Bank too has fallen below that 41,250 mark, closing in on 41,200 as we speak. Amrish, before we talk about the markets, your thoughts on Religare and what the management said. 5,000 crore market cap, the streets valuing their insurance business at over 9,000 odd crores. Do you think there's value, or maybe it's flattering to deceive?
No, surely there's value because, clearly they had major issues in the past, which we all know. But then the last 3-4 years, they have restructured themselves, got their business in order, got new investors in place. And I think the value unlocking will now start happening. So I still see an upside, may not be 100% upside, but clearly I think a 25-30% upside from here is, should be possible over the next 3 to 4 months.
Okay. All right. See some upside in Religare. Any thoughts on Sequence Scientific? The stock has spurted of nearly 18-19% after calling off that acquisition.
No, in fact, I don't track that closely, Rima, so I really don't have any views on that.
Amrish, let me just ask you about the auto names. We've seen fairly erratic moves. We had a good day on Bajaj Auto, for instance, earlier in the week, but no follow-through. Today, there's a lot of pressure on M&M, on Tata Motors, Maruti as well. What are you doing with auto stocks? Anything that is of interest right now?
Clearly, I'm not too keen on buying into the two-wheeler space. Although we have seen the domestic sales decent, exports have suffered, no doubt. And even the domestic sales, I think, will have an issue going ahead because I think the competition from EVs is going to be huge as far as two-wheelers is concerned. Basically, I'm looking at the passenger car segment as well as LCV, HCVs. And because of which I would surely look at buying into Maruti, possibly at slightly lower levels, because I'm clearly, quite cautious on the market at this point of time because I see levels of 17,000 being achieved over the next couple of weeks. And that's the time possibly I'll look at buying into Maruti, Tata Motors closer to about 400 levels, and Mahindra and Mahindra.
Okay, stay on, Ambrish. Need to slip into a very short break. We'll come back and get you more on the markets. We'll also have the closing levels. Currently, markets are inching towards a 1% cut.
1% down on the Nifty, 1,700 stocks declining for 1,100 stocks which are advancing. The advanced decline lines at the furthest that they've been since morning, with the red line being above them. The Nifty is almost given up half of the gains that it has made. The near 600-point gain that it made from last Monday's low of 17,255 to around 17,850. The Nifty has given up 300 points of those, and 50% of those coming in today's trading session itself. But in light of such a wobbly market, one of the stocks which is a mild outperformer in the sense that it hasn't fallen as much and is just below the flat line is Asian Paints. There's been an interesting report on Asian Paints this morning, and this comes in from Macquarie after they got some clarification from Grasim on their paints foray itself. Grasim has clarified that the 10,000 crore paint capex number that they had announced earlier includes, plant, working capital, tinting machines, dealership, as well as branding costs too. Macquarie says majority of the street has assumed that this entire 10,000 crore will actually be attributed towards plant building itself. Now, with this clarification coming in, how much could be going to the plant business, and what else is Grasim likely to invest in? Macquarie's made an assumption, 300 to 400 crore coming in for working capital expenditure, another 300 to 400 crore coming in on tinting machines for them to reach out to 20,000 dealers, branding and ad spends. Now, there's no one number to put to it, but Asian Paints does about 800 crores, Berger Paints does about 250 crores, so this number could be anywhere between that, whereas plant commissioning could be more regional in the initial phase, as against fears of Grasim launching a national product itself. So as a result of which, they believe that there would be limited impact on Asian Paints from Grasim's capex, and they've maintained their outperformed rating with a target of 3,600. Now, Amrish, you have thoughts on Asian Paints. You like its leadership. You like the fact that, it's not easy to take away or topple the apple cart by just investing in plants and other capex. So with this decline from the highs, do you think, you'll be a buyer in Asian Paints? And what about the other paint companies?
In fact, I just tweeted about that.
Yes.
Like some time back. So basically, manufacturing paints is no rocket science. I think the differentiator clearly is the brand recall, the distribution reach, and most importantly, the control on the retail, which clearly Asian Paints has. JSW and Grasim, I think, probably will snatch some market share from the regional players and the smaller players like Indigo. But as far as Asian Paints is concerned, I think the moat is huge. And again, we should remember that selling steel and cement, which JSW and Grasim has been doing, that is, nowhere compared to selling paints. That's a completely different ballgame. So I think the only one which can create some difference out here could be Astral, which has got into paints and has had a very great success story in the last 10 years as far as selling pipes is concerned, which is somewhere closer to selling paints. The way they have the control over the retail. So that could be a dark horse, but still, I think Asian Paints cannot be touched. So this fall, which we saw from about 3,800 levels to closer to 2,700, I think this is clearly a buying opportunity. It could take about possibly 6 months or 8 months for the stock to move up, but then I don't think it can go much down from here. So I think it's a great opportunity for a long-term pick.
Do you look at Gokuldas Exports, Ambarish?
No, that's one more stock which I really don't track. So difficult to talk on that.
It's a large deal, right? The promoters sold about 10% stake now. And the question is what happens to the balance 10?
Absolutely. That was one of the big block deals that we saw in the market today. Amrish, anyway, thank you very much for joining in today. Always great to have you on the shows. Appreciate you taking out the time. With that, let's start wrapping out what's been a really disappointing day for the bulls. There's no other way of putting it because of the manner in which the U-turn happened. Today was not a day where the market was just consolidating recent gains. The market undid a lot of the heavy work, the patient work that it did in the last couple of days. In fact, yesterday's gains have been completely wiped off. We have closed below yesterday's low. In fact, we've closed at the lowest level of the day, 17,580.81. That's where the ticker is kind of trending. The second negative for me really was the fact that this was a momentum move on the downside. A lot of big stocks were responsible for it. Your Reliance, your TCS, your HDFC Bank, your weakness in an ITC. So lots of the big boys contributing to the down move. It wasn't an isolated move just in a couple of stocks. Autos were, of course, quite weak. We saw that in Mahindra and Mahindra. It's the weakest name on the Nifty, down about 3.5% at close. Tata Motors, you had Maruti as well. moving on the lower side. Hero Motor was down about 1.5%. So weakness on auto. Some more consumer names. Titan, for instance, Tata Consumer. So consumer stocks not particularly doing too well today. The flip side was not much. There was a Bharti Airtel that was reacting to a positive CLSA report. There was Tata Steel. There's some bottom fishing going on in steel stocks today. And maybe an L&T. But besides that, you can't really count too many major Nifty gainers today. So, Rima, a pretty weak session that basically sort of takes us, almost back to the drawing board. Not quite, but I think almost with the strength of this fall that we've seen today.
Yeah, absolutely. Two possible reasons, right, for the weakness. One, the kind of run-up that we had over the last 3 days. Remember, the low on the Nifty last week was 17,255. From that level, the Nifty had rallied 500 points in a span of 3-4 days to get us to levels of 17,750. And from there today, we have seen a very sharp correction of 170 points. And the second reason could be nervousness ahead of the US jobs data, which comes out after the Indian market shut for trade tomorrow. So there could be some nervousness ahead of that. The mid-cap index also ends in the red. The mid-cap index is down more than 0.5%, but relatively it has outperformed. The cuts on the mid-cap index are less compared to the Nifty and the Sensex, though the advanced decline ratio is decisively in favor of the losing side. If you have to put it in numbers, we had about 2 stocks in the green for nearly 3 in the red. Let's run you through some of the big losers. One of them is Home First Finance, where we had a large block deal of close to about 8% stake, take place. We understand a large VCPE sold their holding in Home First Finance. Gokuldas Exports, where the promoter sold about a 10% stake. Sugar stocks came in for some profit taking. So Bajaj Hindustan takes a big knock of 6%. Sri Renuka down 4.5%. New age tech companies like Nykaa got hit. Nykaa down 3%. On the gaining side, Electra Green Tech. That stock's been just flying high. Upper circuit of 20% for Sequence Scientific as well. And then towards the end, you had other names like Maharashtra Seamless rallying on large volumes. Rights made an up move in the last 30 minutes, the stock ending with gains of 5.5%. But down day for our markets, weak. Benchmark indices lose 1%. So we're going to wrap up on Closing Bell. From the entire team, thank you for watching. Don't go anywhere. Our Tuesday special, Big Deal, comes up next.
Powered by LIC.